I was able to take a $1,000 position on AMC Calls Thursday and run that all the way to over $10,000 in one day. Does this happen all the time? No. But when it does, I want to show you guys exactly what I was looking for, how much I was risking, and why I even had AMC on my radar in the first place. Big question I always get from my group: why were you looking at that stock? How did you know it was going to run? Which at the end of the day, it's not that I can tell the future or predict the future, but I do have previous market data in my brain that says, okay, if market conditions are starting to reach this level, these are the stocks that I'm going to have on my radar, especially when AMC was flagging perfectly. At 9:59, which was right in here, way before the run, I posted what I was looking for on AMC, the chart. You can see we were flagging, we had been consolidating, and I thought that we had a fantastic chance at a really nice breakout if we caught that boost in volume that I was looking for, which we definitely did. And you can also see right here, I've got $8 weeklies on AMC on radar if we start heating up, but those are lottos. So with my group, they always know that if I am playing weeklies or something a little bit further out of the money, that is risky. And so there is a way to mitigate your risk, which I will show you guys what my risk level actually was, but I just always call them lottos, which for me is like a lottery ticket. And my lotto size typically is $1,000, but that'll be dependent on your risk management, your portfolio size, and pretty much how you trade. So if you are trading with big size, then $1,000 might be your lotto size. If you have a smaller account, you might have, $50 or $100, whatever is considered play money to you typically is your lotto amount. So now for the trade breakdown. So let's start actually by reversing and going to look at SPY. So SPY had that really insane rally from basically Powell saying they were going to cool off with the interest rates, and the market was very, very happy about that. But that also meant that there was a lot of large caps that were already up, 1,000% on weeklies or some 500%. It was just way too much risk at that point for me to continue to play calls on SPY or some of the other large caps. I thought it needed to settle some. So when that happens and the market starts to get very green, I love to go back to my mid caps or my small caps, the ones with higher volume, because it's always a lower risk versus higher reward if markets continue to rip to the upside. And I had been paying attention to GameStop because their earnings is coming up, and BBBY and AMC. Typically, I like to play AMC versus the others because it has a higher volume on the call side. So if I'm scalping, I really want higher volume on options versus BBBY, and GameStop really didn't have the option volume I was looking for. That is why I went with AMC. I did have shares in BBBY and a few call options, but it was nothing crazy. My main focus was AMC. So next, that brings me to which calls I was trading. And so I was looking at the $8 calls. So you're not going to be able to see these now because they already expired. But if you go down to the tab, I like to pay attention to volume. It had very, very high unusual volume on those $8 calls. You could have gone the next week, which would have been less risk. And those right here, we can actually, let's see, I can plot those out really quick for you. Let's go here and let's see how far those ran. So safer bet is definitely not to play weeklies if you're new. But again, there really wasn't that much risk on this trade, and I'll show you guys in a second. So you can see the ones that are expiring on the 9th ran from about 18 cents all the way to $1.41. So that's still a very, very insanely nice trade when it came to playing AMC calls a little bit on the safer side. But for me, I think I can actually just change this for you real quick and let's see if it pops up. Yep. So this $5, oh my gosh, I wish I would have set a really high limit order, but somebody got filled at $5 per contract. That is insanity. Anyways, you guys can see the importance of playing volatility very quickly and not having a market order on your option contract, because if you got filled at $5, you were screwed. So for me, I had a plan that I only wanted to put $1,000 into this position because I just didn't feel like risking any more than that. I had made really good gains the day before, and so I decided to just protect a lot of that capital. So it was actually pretty painful that I didn't put more in this trade, but it is what it is. You definitely cannot be disappointed in a win like that. So you can see that market open right here on AMC. I had alerted the group before 10 a.m. that I was looking for calls, and it was going to be $8 weeklies, which would be these right here. So those were trading around 0.06. Let's see, this is 10 o'clock. They were trading under 0.10. So it was like 0.07 to 0.06 per contract. And my plan was to buy 100 block which means 100 contracts. And so if it moves up a point, I'm making $100. If it goes down a point, I'm losing $100. And so my risk was low of day. So I was risking underneath $7.20 to potentially make, infinite upside when it comes to option contracts. They really can be very lucrative if you're on the right side at the right time. And so my risk was about $200, guys. That was all I was risking on a $1,000 position, was $200 to make 1,500%, which is an insane return. And so I do want to highlight that, because even though it was weeklies, you can still manage your risk and come out really, really nice on the upside. It's just when people comment things like, oh, you're just gambling, blah, blah, blah. Those are the people who have no idea what a stop loss is. They've went into a trade, had no plan, and they've lost all their money, so they have a bad taste in their mouth. So just make sure if you're playing short-term expiration contracts, you have a risk level set. For me, typically, I like for that to be underneath pre-market support or low of day, not too close to suffocate it, but enough to where I'm not losing too much if it goes against me. Now, this insane candle at 11.27 is also why it's really important that when we are melting up into a move and you're getting that volatility on option contracts, you need to start scaling out as the move is going up. Because the minute that it halts or starts to come back down, your volatility and premium is going to crash very quickly. So you can see this was at 11.27. We halted somewhere around here as well. So I started to scale out before the halt because I did have that 100 block and I wanted to exit some of my position. I started to scale out before the halt. We halted, I held on to some of my position, and then I actually held some of it until the end of the day because we did curl back up and hit a new high of day. But at that time, I believe I was only up 1,200% on the rest of my position because, again, premium will cool off. So whatever you're holding, and when the stock starts to come back and find a base, your premiums will decrease in price because the volatility is coming down. Now let's move on to trade number 2 on AMC, which I took Friday, which was the next day, which netted me 200%, but I actually took more size, and I was trading the $8 calls again. So I netted about 14,000 on this trade as well. So I called the bottom to the penny. You can see that I said I was looking for 792 to hit on AMC, and then I was looking for a dip and rip on calls. We also got my cross, which are my 2 indicators here, and that cross moving up is very, very key for me to see that bulls are now gaining strength. When I'm doing more than 100 block, sometimes I'll use my Lotto Robinhood account just because they don't charge commission on options, which I know a lot of people hate Robinhood. Personally, I think it's pretty convenient and it's a very easy app to use. At the end of the day, as long as you know how to trade, it doesn't matter what broker you're using, in my opinion, but whatever. So I took a 300 block on AMC calls here. And so when we were moving up, I definitely needed to scale out very quickly because I had so much size. I did not want to be greedy. So it just goes to show, 1, the power of options if you can get timing right. But 2, even though I am playing quote unquote riskier contracts because they're either 0 DTE or they're weeklies, you can play those with proper risk management. The risk management aspect does not go out the window just because they're short-term expiration. It should actually be even more emphasized for your plan going into that trade. It needs to be the top thing on your list. Are the market conditions aligned with my plan? Is the risk versus reward worth it? And at the end of the day, if you ask yourself that question and it is, then if you have a plan, go for it. If not, sit on your hands, watch price action, and just get it next time. So with that being said, I hope this was helpful for you guys. If you're interested in anything education, free trainings, or the trading community, make sure to check the master link down below, and I will see you guys next week.